But once you have one or two deals where you're proven closer, now they bring, okay, now I can show this guy a true deal, right?
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father, of six, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
Mr. Stenziano, I'm doing good. You're looking good this morning. We've got a great guest on today. It looks a little cold up there. How are things going with you?
Good. I was burning wood last night, getting ready for the fall, making it happen, big man. We're donating money to the foundation, Rand Cares, for Thanksgiving. We're doing big things.
Yeah, it's great. It's a great cause.
So we got a special guest today. Today's guest is James Kandasamy. James is the author of Passive Investing in Commercial Real Estate and principal at Achieve Investment Group, which controls nearly 1,000 units throughout Texas. So without further ado, James, welcome to the show.
Hey, Jake and Gino, I'm happy to be here, and thanks for having me on your show.
Thanks for coming on board. Let's get this kicked off. Tell us how you got started in the multifamily space.
So before multifamily, I started with single family, right? So I wanted to start multifamily immediately because I see a lot of people were doing it, but I didn't have enough equity to start. So we only started with 50,000, and I was deciding whether to buy, of course, I can't buy multifamily with that, right? Unless I syndicate deals, right? So I started with 11 single family homes and, build up almost 400,000 of equity on that single family homes and move a lot of that equity into multifamily.
Wow. So let me ask you, James, why real estate? What did you select real estate?
So I think when I was working W-2, right? I resigned like 2 years ago. My wife and I were looking at what can we do? We want to always do something, right? So I did a lot of businesses before I come into real estate. I tried launching my own website where there's a math education because I thought there was a real need for math education. Trying to do a website for kids, and I sold shirts when my younger age. I did a lot of things, a lot of businesses, different businesses, and a lot of times it never worked, right? And I started stock market, right? So let's go to stock. This is a big puzzle. I'm an engineer. I like to solve puzzles. I say, how difficult would this puzzle be, right? Let's make money because that should be easy money to make. It goes up and down, right? But every time I go into stock market, I lose money. Mm-hmm. Every time within like one day, I start losing money because it plays with your emotions, right? And there's a fear and greed position. And I realize a lot of times the reason I lose money is because there's someone big playing out on the stock market, right? There's always I buy stocks at 9 o'clock and until 11 o'clock, the stock will drop like crazy. And I start getting worried and start selling it off at a loss because I say, I want to get out because it's dropping so much, right? And at 11:30 or 12, we start picking up again much higher than where I bought it. Mm-hmm. And that happens all the time on the down turn on that stock, on the upturn on the stock. So I know there's a lot of people who are playing with a lot of these small investors like us on the stocks. And there's a lot of big REITs and private institutions who are playing with this, fear and greed because they know there's a lot of new individual investors coming. And I read an article once. They said 98% of the people who make money in stock market are institutional, right? Only like 1 or 2% are individuals. And I realized, okay, that's what it is, right? So I say, forget about stocks, right? So real estate was very interesting because it matches, before that, I found someone who was doing rental. He was buying like one house per year, and I was start doing the calculation. Even you buy on a normal scale, just buying a house and 100,000 with cash flow, you get like 9% return, and you have equity appreciation or someone else paying for it. So I calculated very quickly, I was able to make like at least 9% return on a single family house. And I thought that's a really good deal, right? And it's a slow, it doesn't play a lot with your fear and greed and emotions, right? So, and my wife really liked real estate. She liked to remodel houses, and she liked to remodel my house. And I have to get her out of my house. She keeps
Gino, hold on, Gino. What do you call that? What is?
This is the bane of my existence and Jake's. I was thinking, or hey babe, those three words that we hear, whether it's hey babe or I was thinking, money is being spent after that sentence. So when I hear that, I just run out of the room and I say, just keep thinking because it is what it is, right?
Yeah.
So,
I thought she gonna change the front door to the back door and change the entire house. Every time she wanna remodel the house, they like to change. I said, okay, I can't do this. So she like remodeling house. Let's go and buy rentals and remodel, right? So that's where it's a lot more slow and steady. I think more consistent return is under your control, right? You can control
so
how
James,
much money you put in, all that.
the definition of an entrepreneur is somebody who makes enough money to pay for their mistakes. I mean, I've been there. It sounds like you've been there. Why did you become successful in multifamily? I mean, my partner likes to say, stay down the fair lane, stay down your own lane, don't deviate. It sounded like you were doing single family, probably had a little Bitcoin in there, probably doing websites, probably selling shirts, a little bit of that stuff.
Yeah.
Why did you become successful with multifamily of all the ventures? Because it's not an easy niche to get into and become successful. But what do you think made you successful in that niche?
Yeah, it's definitely not an easy. Anybody says it's easy, maybe they are doing something else, right? Some other business, right? Like something else. So it's not an easy. But I think why we are successful in multifamily, because two things. One is we are really good at finding off-market deals. Second is we are. Maybe three things. Finding really good off-market deals. We do a quick turnaround of value-add deals. We love deep value-add and value-add deals. Third is just because we are vertically integrated. We have our own property management company. We have our own asset management. We have a construction management, and we raise money all ourselves with our investors. And just because that vertical integration gives you a lot of optimization in terms of cost and operation and turning around properties.
So, James, another question that Jake and I always ponder is, why do engineers love multifamily so much? We have a lot of Jake and Gino students who come from the engineer space. Is it because of the analytical? Is it because you can see something and it just makes sense? And then my thing is with engineers, sometimes they have that fear of getting into it, but they see it. What makes the engineer like multifamily so much?
I think they just like numbers, but there's also a big problem in terms of engineers coming into this business, including me, because sometimes we analyze too much, right? And we always like to try to break the numbers, right? And sometimes you don't go with that gut feel of, hey, you don't have the art on it, right? So so I've learned over the years to include art into the science into it, right? So the numbers doesn't lie. That's what engineers always believe in. But in real estate, the numbers doesn't lie, but you also have to qualify the property and the location, right? You have to qualify that, the demographic, the tenant, which is really not counted in numbers, right? So, the engineers are really likes this multifamily because they think they can solve by being very analytical, but there's also a lot of component of tenant demographics and the location itself, which is absolutely important.
So, James, do you think also a little bit of the fear is you need to have a little bit of faith in the numbers because you're buying a deep value add? So if you're an analytical person, you're saying, the rents are 500. I think I can get them to 650. There's your fear right there because it's not tested. And so what pushes them over the top to actually take that leap? Because when they do, they become ultimately really successful, but getting them past that is really difficult. What do you think?
I don't think so. Everybody is successful in doing that. A lot of people are successful because market has been helping them, right? For the past 9 years, market has been really, really booming. And even though you have predicted $300 rent increase, you probably by your own effort, you probably would have get like maybe 50 to 100. The other 200 is actually your market, right? So I can't say everybody is really successful by turning around a business, right? But I think I would say that it's just taking the leap of faith and going with your gut feel and just experience, right? A lot of times people like to go direct to multifamily. Why is that, right? You should look at single family, duplexes, quads, triplexes, because it gives you a lot of experience, right? On a smaller scale, right? And a lot of operators doesn't even know how to read a lease, right? If you don't know how to read a lease, you are lucky right now because market has been going really good, right? But that may not be the case if the market turn around, right? So it's very important that that people understand that not all of their successes in the past 9 years is attributed to them, or they're doing very well, or they are very successful, and it could be like maybe 50% of that them being very successful. And the other 50% could be the market.
So why do you think the market has been so successful? Is it because of demographics? Is it because of just the growth of the economy? What do you think?
I think what has happened in the past 9 years is, I mean, if I look at the chart, right? I mean, some of it I've explained in my book, Passive Investing in Commercial Real Estate. I've looked at the chart. I did an analysis of 15 years of studies of, all the cities. I mean, I didn't chart for all the cities. I did for Austin. And if you look at it, they are downturn years, right? For even for multifamily, but it's very short, like 1 to 2 years, right? But most of the time it's expansion. But a lot of times this, I mean, if you look at the chart, it also shows this one of the longest expansion cycle. And what has happened is a lot of people, millennial is moving more into a renter's generation, right? The student debt is too high. Everything is going in the cloud. All the work, all the technology work, everything is going into the cloud. There's Dropbox, there's Google Drive, so the people are very flexible to move around, right? People don't want to stay in one place for 20 years. The thinking of, buying a house and staying in 20, 30 years in one place is no more there, right? There's not many people working in one place for 20, 30 years anymore. The millennials like to move around. So the millennial generation moving into apartments has created this black swan effect, I would call it, right? There's a lot more, there's a permanent shift in rent for the past 9 years, right? I'm not sure which year it happened, but I think it happened probably maybe 2012 after the 2008 crash. People just don't want to live in a house. They saw their parents losing their houses. There's a shift in demographic, shift in working style. The divorce rate has gone up. People are working longer in their life cycle. So all that has created a black swan effect, a permanent shift in rent prices. So that has given us a lot of boom in the multifamily space.
Jake, what are the 3 basic human needs again?
I think the 3 basic human needs, if I were to guess, would be food, clothing, and apartments, because that's the demographic shifts that James is talking about there.
Yeah.
We need a place to live.
Yes.
Maslow's hierarchy of needs, right? You can't run away from living somewhere. You have to live somewhere, right?
And my partner loves to say you can't buy it on the internet yet. You can't buy it on the internet. So it's another space that really, if you think about it, there's technology going on and all, but the basic C-space apartment is just what it's been for the last 30 years. There's not much evolution on that. I mean, if you want to get into a little bit of technology and all, it hasn't really evolved. We don't have as far as our apartments, we don't have the Nest thermostats yet. We don't need to do that yet. I think eventually you will have to bring in some type of technology, maybe keyless entries and all that. But for the C space, it's not there yet. And you're getting the rent bumps like James is saying, because people are migrating. And James, you're fortunate because you're in a great market. You're in a great area, in Dallas. We're in Tennessee.
I'm in Austin, Texas.
In Austin, Texas. So that's even
it's all
more
the same dust, man. We just it's just one big,
Yeah, for you guys, everything is same, right?
So when we say we're in Tennessee, everyone thinks we're in Nashville. We're in Knoxville. So and it's the same thing with Florida. The migratory patterns of everyone's moving here because it's more affordable to live. So corporations are actually leaving and moving their companies to the state because an employee can afford to live there. That's the big difference where I think 15 or 20 years ago, it's not just the tax benefits. It's not just the weather. It's not just that. It's you have the infrastructure down here and you have all those things, colliding. I want to talk about your first deal. I mean, how did you find your first deal? And what were the I guess the big takeaways from that first deal?
So my first deal was bought it in end of 2015, almost 2016. We bought it in December. So we bought it through by doing letter marketing. So even in 2015, whether believe it or not, I know people go back and they say, "Oh, I should have bought something in 2015." It's easy to find deal, but that's not true. Even in 2010, it was never easy to find deal, right? Because the numbers will never make sense based on the rent. Right.
I love that you say that. Let me interrupt 1 second because I totally agree with that. Because when we bought our first deal in 2013, 1-bedroom apartments were $350 a month. There was no sentiment in the economy. It was growing at 1%. Everyone was afraid. There was no expansion. And there was no money to raise in to buy those deals. And multifamily was not the flavor. So you fast forward now, those rents are over $600 plus rubs. The economy is growing. People are renting a lot more. So it's basically where you are, and you can find money easily. So I totally agree with it. It's never the right time to buy.
Never right time. Yeah. And I completely disagree with people say I'm going to wait until the economy is going to crash to buy multifamily. I mean, keep in mind you can't raise money at that time.
And what if multifamily doesn't dip because people need a place to live and they're pushed into cheaper rentals? So that's the other thing you have to consider with that.
Yeah, people are going to move from single family to apartments, right? That's it's just going to be. So I don't think so. It's never a good time. It's always going to be hard to buy something that makes sense in any economy, right? So either you don't have capital or you don't have funding, or, you just don't have deals, right? So right now it's harder to find deals. It's easy to find capital. When the downturn happens, it's going to be the other way around. So what I decided was, the only way that I can buy, because brokers don't really listen to me, right? Because I'm a newbie, right? Who's newbie coming out and saying that he's going to buy a deal, right? So I started saying I have to think differently from everybody else. I'm going to do yellow letter marketing. But that's how I started my single family homes, by directly marketing to sellers. And I said, okay, let's do it. So I did something called a text blasting. There's three methods. I used cold calling, yellow letter marketing, and text blasting. And I got leads, like 20 to 30 leads from all these channels. But the first deal we got it from actually from a text blasting, where it's a 45 units. Somebody said, hey, I may have someone who might want to sell. I'm a partner in that deal, right? So I bought it at a market cap rate. So I didn't buy it cheap, right? But I bought it at market cap rate, but not at a price per door of market. Price per door in San Antonio at that time was like 55 a door. But this deal, I bought it at 35 a door, just because it's mismanaged, right? So,
Mm-hmm.
I mean, entry cap rate really doesn't make any difference, right, when you're
Mm-hmm.
buying a value add deal. So I counted it, and it's a really good value add deal. So we bought that 45 units in almost 2016.
And did you raise money for the deal? Did you have
Yeah,
did you create a syndication for it?
correct. Yeah, I have like 4 investors in that deal. It's only like 430,000 at that time.
So what were the learning lessons of that, doing your first deal as a syndication? What mistakes did you make during that deal?
Um, So, well, not mistakes, but I think key learnings was like always prepare your investors ahead of time. Like I was already like doing single family. I was telling everybody we're doing very well. I was telling you need to tell what's the accomplishment, especially when it's a true accomplishment, right? When you have worked hard and make money out of your own deals, you can tell people there's nothing wrong about bragging about your own accomplishment, as long as it's true, right? You're not misleading anybody, right? So there were people interested in investing, and I start building my list, right? So my first deal, I got it was only 430,000. It was subscribed within 24 hours, and it's done because it's a really good deal. The deal is a good 1980s, brick construction in San Antonio. It's a good location, and there's a lot of upside. Um, but after that, once we closed on it, we learned a lot, because it's hard to hire a property manager for 45 units, right? So we can hire either part-time property manager or part-time maintenance. But we decided to hire a full-time property manager and do contracting for maintenance side. So it was hard, and also finding the right managers are very, very hard, right, for that property, because we have high expectations, especially we owners, when we want to turn around properties, and we have investors, and this is your first deal, you're trying to do really your best. So we changed like at least 3 to 4 managers in the beginning. So that was really hard, because some days you don't have managers. We have to sit on the property and run property management, but where we
Mm-hmm.
really learned a lot, right? And the second thing that we really learned from that first deal is how do you manage contractors? It's really hard to find good contractor. You are new, somehow it was Christmas week, which is when we closed. So we are like finding contractors. So we have to go and advertise in Craigslist. We found like 2 or 3 contractors, and after that, letting them go because they're not doing very well, and choosing the best contractors. So that was really hard learning as well. How do you find the right contractors? Once you find the right contractors, once you find the right managers, things got a lot more smoother, right? And
Mm-hmm.
we were able to refinance 117% on that deal within 12 months.
That's awesome. So how long did it take to get to your next deal?
It took me almost another year.
Oh,
It was
okay.
not easy because of the method that I was using, right? I mean, doing this marketing direct to seller, it takes time, right? It's not a
Mm-hmm.
quick and easy way, but you need patience. But even that deal I was negotiating almost for 6 months, right? And even that deal we got a really good price as well, because almost like 37 a door, and we refinanced that deal within 12 months as well for 117%, another 117% cash out refi, which is crazy, right? So
That's how
Yes.
we like it.
So
absolutely.
I think it's important, everybody on the call, just to write this down. Patience and persistence and willing to walk away. It's really important. It took James 6 months of negotiation for this deal, and it's a great deal, and it was worth it, and it's a lot of work. Christmas week, he's on the property. He's doing work on the property. I think 45 units when you're first starting out is wonderful, but you can see the problems or the challenges with that. So multifamily, as you get your first deal, you want to scale up as quickly as possible to get to your second deal. James, I want to go over some of the off-market ways you find deals. I like the video text you said. Can you go over a couple of your strategies?
So I do not video texting. What I do is I do a cold texting, right? So what I do is I basically download sellers information from sites like ListSource. I mean, at that time I was using listsource.com. So anybody want to go and download owners information, go to listsource.com. That's one of the cheapest way to get owners. And once I do that, I use a TLO to start looking for sellers contact information. You can get phone numbers. You can get all the addresses and all that, and that's where you started text blasting. And I use an app called Excel XMS, but I think nowadays there's a lot more other apps, but at that time there was only one app. Is called Excel SMS, where you can text from Excel to direct to SMS, where SMS is texting. So you just have to do it multiple times. As you say, it's persistence. These are the things that people would not do because it's hard work. A lot of people just want to go to a broker and try to establish a relationship with a broker and trying to get it, but you probably don't get a deal. You may have get a deal, but that may not be the deal, right? That may not be a good deal. It's marginal deals, right? Getting it from brokers nowadays.
What size complexes does this normally work for? Can you get the 200-300 unit complexes with this, or do you get the mom and pops?
You can definitely mom and pops. Less than 100 units, you absolutely can get it. You just have to work hard and believe in it, and you can get it. I would say less than 150 units, you should be able to still get deals when you go direct to sellers. Once you go above that, yeah, absolutely, you need brokers. But I think the more important thing is once you do one or two deals, the brokers brings you, a more true deal, right? That's where they bring you the real deal, right? If you're completely newbie, they're going to give you the most deals that nobody really wanted, right? Like 1,000 people already underwritten, nobody wants it. Now there's a new guy who want to start, they'll give it to them, right? But once you have one or two deals where you're proven closer, now they bring, okay, now I can show this guy a true deal, right?
So James, do you think it's still important to create those relationships with brokers? Because I think as this market cycle is going to go in a downturn, this is when you need, like you said, it's never the right time to get into it. If you get into it now and start creating those relationships with the brokers, they're not calling you right now, but in 6 months to a year, they may be calling you because they have these deals they need to sell. And what's going to happen is I have a student that had a deal was on LoopNet for 3 months. It was listed at $1.3 million. The broker told him it was $1.75 million. He wouldn't take any less. Now, I negotiated, was talking to the student. I told the student, put your offer in at 930. The broker says he's not going to go below. The seller countered at 970. So he wasn't going to take anything less than $1.75 million, and he went to 970. So my thing is, I think brokers are going to start making mistakes where they're overpricing their properties. They're going to stay on the market for a little too long, and then they're going to come in and become motivated sellers. I mean, now you have to know why the person's selling and all that, but as you see the market starting to turn, I think brokers are going to make that kind of mistake where they're not reading the market properly. So I think brokers, it's important to create that relationship. Do you think it's still important to get on the call with brokers and build that part of the business also?
Absolutely. You have to keep on doing both ways, right? I mean, if you're starting up, you can try the direct to seller, but at the same time try your brokers as well. As you said, there are brokers who are making mistakes. I see it all the time, right? Sometimes mispricing. Sometimes certain sellers have too much expectation when you want to sell. And they know when after 1 to 2 months, you are not you're not selling, and now it's a bit hard for them to go back into their price because you're already listed with a broker. They already told the whole world and all that. But sometimes when once in a blue moon, you got a buyer who are coming with a realistic price and want to sell, and maybe just let it go, right? Because a lot of sellers out there already made a lot of money in the past 9 years, right? The amount of equity that they have built is a lot, right? So how much, if they want to reduce by 500,000, it's probably not a big deal because they probably made like $4 to $5 million in the past 9 years, right? So absolutely keep on trying with brokers. Brokers give you other information that's not available in a lot of publications as well. They know the local, they know the experts, they know what's happening in the market. Absolutely keep on trying all channels.
How do you create relationships with brokers? How do you cultivate that relationship with the brokers?
Oh, you have to visit them and say hi to them, and at least when they send you a deal, at least respond to them, right? Saying this is what's my criteria is. It's okay. I mean, I've seen a lot of brokers who appreciate that when you tell them that this is not what I'm looking for, right? They just want to know what are the flavor of buyer you are, right? Because it's very important for them to understand you. at the same time, they also have to understand the deal. Sometimes there could be a deal where they think, oh, this guy will be the best buyer for it, and they come to you, right? And every time a broker call me, first question is, why me? Why you're calling me, right? There's thousands of other people. So if they can justify to me that there's a specific reason why they call me and they think I'm the right buyer, then I will underwrite the deal. Otherwise, I usually don't even underwrite the deals, right? Because most deals are fully marketed.
So it's funny you say that. I think what Jake likes to say is you're the salesperson. You have to sell yourself to the broker. And I think one of the best ways to do that is go on property tours. Make the broker see that you're actually serious. I mean, don't call on the phone and expect to underwrite deals over the phone. You actually need to visit the market. Even if you're not in that market, you need to get on properties. And even if those aren't deals, you need to show the broker that you're serious, that you're not a tire kicker. They don't want to go out get a cup of coffee with you because they've got a lot of friends and they don't want to waste their time. They want to be serious and they want to look at property. So I think that's really good advice.
Yeah. And brokers love to do off-market deal. I mean, from what I know is like 95% of the deals are done off-market. It's not really, marketed very well because, they make money, quick money. I mean, they have a fiduciary responsibility to sell the deal as quickly as possible to the right buyer who can close. And the right buyers are usually, close deals off-market because, there's a lot of times sellers don't want to, scare their employees, and they don't want to have multiple visits to their property. They don't want, they don't want to talk to 100 people. They're busy. Usually sellers are busy, right? They're busy with other things. They don't want to talk to so many people on different deals, right? So yeah, establish relationship with brokers, touring properties, having more face time with them, just showing, how serious you are is absolutely critical.
I love that. How are you underwriting deals right now? Like as far as value adds, what are you looking in properties to actually make these numbers work for you?
So, I mean, for the past 6 months, I only underwrote like 3 deals and I closed one of them. So my underwriting percentage is like 30% because almost all deals I don't underwrite. So as I said, I usually look for something special. Like the one I closed, I got it directly from the seller. It's a $30 million deal, 350 units, right? But I got direct from the seller, right? So not through any marketing. Well, this is a special marketing. I used to do cold calling, texting, and but I stopped doing it after my first few deals. But this deal, we got it through our Facebook group, right? We have a Facebook group called Multifamily Investors Group. I found the seller through there, and they came direct to me. So we can name that Facebook group a $30 million Facebook group, right? So
yeah,
we just closed on it last week. So I really don't underwrite most of the deals nowadays because I think most of the deals are overpriced, especially when it's fully marketed. So I don't waste my time unless a broker call me and say that this deal is in front of your property. Why not you look at it? Then it makes sense for me. Or if they think there's something hairy on that deal that they think, okay, we think you are the right buyer for it because you can solve this kind of problem. You love this kind of problem. Then they come to me, then I'll underwrite. So otherwise, most deals, I really don't underwrite deals.
So what made this deal attractive to you?
It's in a really nice part of town. It's near to medical center in San Antonio. The price per door was absolutely making sense because it's slightly higher when you look at price per door. But if you look at the square footage of each unit, is much, much larger. It's like 1,000 square feet. So I like to look at this metric called price per door divided by square footage rental, because that's where the rent price of each unit is being counted, right? And sometimes people are getting confused with price per door. People talk about, I bought 50 a door and another guy bought it at 90 a door, and people say, oh, that's too expensive. But price per door really doesn't make any sense when you look at the square footage of the unit, right? 50 a door could be a 400 square feet units, right? But 90 a door could be 1,000 square feet per unit, right? And that makes a lot of difference in rents, right? And so the numbers works perfectly for that deal. It's in a good location, absolutely mismanaged by the current property management company. They're trying to get out. They are in a fund. They have one. They need to start selling their deals because they're in a fund. And we walked away from that deal after doing our first due diligence. We did entire 350 units interior rehab, and after the inspection, 350 unit, I said, okay, this is too expensive. There's breezeway. There's too much AC issues. I did not budget it. I said, I'm just walking away. And I told the seller, so we just do not want the deal. And they said, hey, don't go away. Why you do not want the deal? And I told them that it's too expensive. They say, okay, give us a price. And I told them, hey, can you reduce by 1.2 million? They said, oh, absolutely no. So forget about it, right? So I said, okay, fine. We just left on. And after a week, they called me back. They say they gave me the price and less by $1.4 million.
Wow. So what is the budget on that deal to do all the rehab? Did you?
Yeah, original budget was like I think I budgeted like 1.2 or 1.1 million, if I'm not mistaken. It went up like
Mhm.
2 point something million, right? So after our due diligence, and that's why I said, okay, I'm not going to do this. It's too big. It's too monster ship to turn around. If I don't go in with the right budget, it's just going to be too bad.
Mhm.
So yeah, we have to put additional like almost like $1.4 million budget just to be comfortable with the deal.
And what value adds do you have in the deal? Raising rents,
Raising
cutting
rents,
expenses.
yeah, cutting expenses. Yeah, the expenses were like almost like 65% expense ratio.
Mm-hmm.
And rent was like lower by 130 compared to the comp surrounding it. And just management and increasing rent. The exterior was done nicely and there's a lot of nice amenities. So
Mm-hmm.
these are the two big things that we're doing.
So when you look at a percentage for 65%, do you know what the cost was per unit in expenses? And do you look at that per unit, or you look at through expense ratios?
I look at expense ratio because cost per unit sometimes can be a bit misleading because sometimes smaller size can be slightly more, because let's say 200 unit on a 500 square feet average per unit. 200 units, usually people say, oh, you need 4 staff, right?
Mm-hmm.
But 200 unit on 1,000 square feet also needs 4 staff, right? So your
Mm-hmm.
payroll number can play a difference in terms of price per door, expense per door, right? So I like to look at expense ratio because when you have larger unit, your rent is higher and your expenses are lower, right? So
Gotcha.
I like
Okay.
to look at expense ratio.
Before we get to the short answer questions, what would your
Sure.
best tip be for anybody trying to get into multifamily, as trying to get into the space right now?
Change your mindset. If you think there's a deal out there, absolutely there's deal. If you think there's no deal, absolutely there's no deal.
Mm-hmm. I agree with you 100%.
All right, gang, let's take a quick time out to hear from our sponsor. Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow our proprietary framework that we've created: buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply. All right, we're back. Personal side of things. James, what is your best habit for success?
Best habit for success. That's a tricky one. Yeah, I mean, just make sure that you have morning routine where you create your own focus in your life, your goals. The morning routine is what I think is the best habit for success. Like we do meditation, we do journaling, and we do visualization. Make sure you're focused on where you're going.
Mm-hmm.
And you have a positive mindset and you believe you can.
Mm-hmm.
Absolutely, yes.
Number one tip for someone starting to scale a property management company.
Number one, believe that you can do it. Don't think property management is a thankless job. In a value add deal, you need to have that control over property management company, because it's a hard work. Property management is hard work, and a lot of people do not want to do it, but that's where the money is being made, right? The sprint is on buying the deal, but the marathon is in the operating the deal. You make a lot more money for your investors in the marathon, where operating the deal.
Book recommendation.
Apart from my book, of course, Passive Investing, Commercial Real Estate, I would say Think and Grow Rich by Napoleon Hill.
Biggest takeaway from the book?
It's all in your mindset.
Mindset. Positive mental attitude. I love it.
Absolutely.
What project are you excited about right now?
I'm excited about, the latest deal that we're doing is a 350 units, is almost $2.3 million in rehab, right? So that's a big turnaround. Just turning that big monster around is going to be very interesting.
Did you raise the capital for the rehab, or did you do a bridge financing?
I've always done Fannie Mae long-term loan for the past 1.5 years, just to be more cautious, just because of market cycle. So I raised the rehab money out of the loan.
Nice. Great job there. What is the best way for listeners to get a hold of you?
Best way. I'm in many places, right? I'm in LinkedIn, James Kandasamy, Facebook, James Kandasamy. I have my own Facebook group, multifamily investors group, which has like 3,000 people right now. You can see a lot more of me there. I do a lot of short videos for people to learn. My book, Passive Investing in Commercial Real Estate, in Amazon. I have my own podcast. It's called Achieve Wealth Through Value Real Estate Investing, which you guys were in. You have that soon. So Achieve Wealth Through Value Real Estate Investing podcast, and a lot of other podcasts who I was interviewed as well.
Excellent. James, love networking with other folks that are managing their own stuff. I think that's fantastic. Gino, anything else before we sign off?
I think if you're in the single family space and you seeing that it's a grind and it's a tough time to get into the multifamily, then it's going to be a tough time to get into multifamily. I think it's a long game, right? I mean, James didn't become successful overnight like Jake and Gino. Took a lot of education. Jake always likes to say education times action equals results. You could take massive action and not be educated and have no results, or you could take massive education and not take any action and you'll still have no results. So I think you need to get educated, and I think this is a great space. I really do long-term think it's where the money's going to flow. I think, as James was saying, the demographics, just play to it. I think people are just renting. It's easier to rent, especially with smaller families, people who have a lot of student debt, with people who want to be transient as far as workers and go around wherever. I think that's important. So I just want to give James a lot of credit for being successful in the space, and just thanks for having him on.
Thanks for having me here.
Gino, think about it. Your apartments pay you every month. It's a real asset that's generated income. The house does not. So I think the key is to own assets at the end of the day. James, thank you so much. Really appreciate you.
Absolutely happy to be here. Thank you for having me.
Thanks, guys.